Now, if you are employed, meaning you work in the corporate world or you work in the service industry, you're employed. You have a boss, you have someone that you report to, you are working for a company and not for yourself. This is the information that you need to provide to your mortgage professional in order for them to qualify you for a mortgage, whether that be a pre-approval or if you're ready to make that deal. Hey guys, welcome back to my channel. It has been a while, and yes, I am here all cozied up in my home office, and I wanted to come on here and do a quick video for you guys today because, as promised, I want to deliver some value and information to you home buyers who are looking to purchase your first home or your next home or your investment property. I want to give you some tools and information that you really need to have prepared when you're ready to start the process of purchasing a home. What you need to do is get a pre-approval. It's very important to know what you can afford before you go out there and you start shopping for your new home or that new investment property. You need to know what can you truly afford. It's big right now because with the real estate market and the demand, the real estate market right now in Toronto or in Ontario, it's very competitive, and you want to make sure that when you go in and you find your dream home or you find that perfect home for you right now, that you are capable and able to put in an offer with the comfort and knowing that this is something that the bank will for sure or comfortably approve for you because you've already received the pre-approval. You already know what your ratios are. You already know what your max mortgage affordability is. So let's get into the details. This video is for all you corporate workers out there, all you 9-to-5s, all of my employed buyers. If you are employed, this video is for you. These are some of the basic informations that you need to have prepared to provide to your mortgage professional, that being me or anyone else that you decide to work with during your journey to home ownership. You need to provide to them, and this is mandatory because they are providing you hundreds of thousands of dollars to purchase that home or that property. You need to provide a valid piece of government issued ID. Now that could be your driver's license, that could be your passport, that could be your residency card, but you need to provide them with a valid picture government issued ID. Your health card is not it. The next thing you need to provide is a letter of employment. Yes, this is absolutely necessary in the climate that we're in today. The banks need to know that you can afford to pay this mortgage off. You can afford the monthly payments. You can afford to be a home owner. This is very, very important. This is important for anyone, for you especially if you are employed, meaning you're not self-employed, you're not a sole proprietor, you don't own a corporation. There is a whole different criteria for that, and we'll get into that in our next video. But that letter of employment needs to be within 30 days of you going in and sitting down and starting the process of the pre-approval or the purchase process, however way you started or whenever you started. But once you sit down with a mortgage professional, you need to have a valid letter of employment. It cannot be from 6 months ago. It cannot be from a year ago. It needs to be valid because anything can happen in 30 days. When you are obtaining that letter of employment from your employer, you need to make sure that you have listed on there, one, obviously your full name. It needs to have a letterhead, meaning it needs to have the company's letterhead or logo, whatever that is. It needs to be a signed letter, and meaning letter of employment from the person that is actually creating that letter of employment for you. It needs to have obviously the type of employment, meaning are you full-time? Are you part-time? How long have you been working for the company? What is your position in the company? What is your salary if you're salaried? If you're not salaried and you're on hourly, what's your hourly rate? How many hours are you guaranteed? Whether you're full-time or part-time, guaranteed hours on your letter of employment is very important if you are hourly, because that allows the mortgage professional as well as the mortgage lender that is providing you the mortgage financing to know for sure what your minimum monthly income would be based on those calculations. That means if you happen to make more than that, then that is just additional money that we can put as other income or additional on top of that guaranteed amount that you know or we know in our calculation that you earn. So that is very important. Specific to your situation, please feel free to reach out to your mortgage professional, including myself, and we can discuss this in more detail. You need to confirm your start date. Like I said, how long have you been with the company? Maybe you started in 2020. Maybe it's the most recent, because we need to understand that whether you're in a probation, if you're still in probation, and what that probationary period is. So that start date is very important to understand if you've been with the company for a long time or if you're a recent employee of the company that just started. So it's very important to have those things noted on your letter of employment. The next thing that a lot of people are surprised to hear that we need is a credit check. Yes, we need to check your credit. We need to do a credit check on you. Now, most mortgage professionals do it through Equifax. Sometimes we may require TransUnion depending on if we have some discrepancies. But if you're wondering, why do we need to check your credit? We need to check your credit because the way we check your credit is actually, yes, it is going to be a hard hit on your credit. But that's because we need to determine all the liabilities, obviously your credit bureau rating. We need to confirm if you have any derogatory statuses on your credit, because that can definitely impact your approval. It could change the type of lender we have to go to for your mortgage. So it's very important for us to do a credit check. We cannot trust and give you money or pre-approval, even if it's not an actual approval, meaning a purchase mortgage as of yet. We still need to do that, because that's how they're going to determine whether or not you are a fit client for their mortgage. So yes, we do need to check your credit. When we check your credit, be aware that every time you check your credit for the same type of product, meaning if I'm doing your mortgage and I am doing a credit check on you and you decide to go and shop with another lender, it is actually seen as a one hit because you've done it within 45 days and it is the same type of product. So it's actually reflecting on your credit bureau as one hit. So it doesn't impact you the way that you think it would. It doesn't drop your credit score as much as you think it will. It's just seen as one hit, even though you may have done it 3, 4, or 5 times for the same product. So now we've checked your credit, we have your ID, we have your letter of employment. Guess what we need? We need your notice of assessment for the last 2 years. So we're now in 2021. That means we're going to need 2020 when you complete 2020. We're going to need 2019, and potentially, because of the climate we're in, we might need 2018, because we need to see that, one, you don't owe any taxes. We got to make sure you don't owe the tax man. But 2, we need to confirm your gross income. We need to check that line 1,500 or 15,000, I believe now it is, that we need to confirm those numbers. We need to check your total income, your gross income, and we need to see if it's more potentially than your actual year end or your letter of employment stated income on there. Whichever is higher, that's what we'll actually use to help you get the maximum amount you can for your mortgage. Because maybe you have a full-time and a part-time job, but maybe that part-time job doesn't give us that letter of employment that we need with the guaranteed hours, but you've been employed with them for over a year or 2 and you've already done your taxes with that income. We can actually then utilize that income noted on your tax report, you can use that income other than the income that is actually noted on your pay stub, maybe a year-to-date earnings, or even your letter of employment salary noted, because maybe you did overtime. So that overtime will be reflected not only on your pay stub, but also in your notice of assessment to show your total earnings gross in terms of 2019, 2018, and possibly 2020 when you complete it. So that way we can actually use the amount, the maximum amount, to help get you approved for the biggest mortgage amount that you need. Especially in today's climate, it is so competitive out there. You need a good substantial amount to truly purchase a home of a substantial size, especially if you have a growing family. We also need your 2 years of T4s for all your places of employment. So if you have a full-time job, we'll need it for that, and we'll also need it for the part-time, because that will confirm your actual earnings for each role or for each job that you held in that year. So that way we can also make sure that it aligns with your notice of assessment and position it in a way that will help you to get, once again, the maximum amount that you need to purchase your new home. Now, I did bring up another thing that you didn't clue in on: your pay stubs. We need your pay stubs. We need your last 2, sometimes maybe even 3 or 4 most recent pay stubs. We need to see that you're still earning income, that you're still working, you're still in the workforce. Yes, that letter of employment will somewhat confirm that, but we need to confirm that you are working, you're consistently working, and to also cross-reference your earnings with all the other things that we now have: your notice of assessment, your T4s, your letter of employment. We need to cross-reference it. So with that being said, these are all the things that we will need in order to truly do a pre-approval application for you, to provide you with the information so you can start shopping for your new home or potentially your investment property. And obviously, we need to know how much you're going to put down on the purchase of your home. What is your down payment? Where are those funds coming from? Your down payments are in fact in a bank account, so they do need a 90-day banking history. We may require banking statements to confirm that, because the lender does need to confirm that those funds are in fact funds that you have. And if they're not funds that you have, if they are coming from other sources, we need to confirm those other sources as well. So that is a whole other topic for another video. But with that being said, you have the downplay of what you need to provide to your mortgage professional in order. Now, there's a lot of information and a lot more to come, and a lot more that we need to expand on in these areas. For example, down payments. And remember, this is for employed individuals looking to purchase a home, and this is the process and the things that you need for your pre-approval. For a self-employed or a sole proprietorship, or if you're incorporated, the details or the things that you need are pretty similar, but there are additional things that you will need, which we will explore in our next video. So please hit that subscribe button and stick around for more information to help you, empower you for your purchase, for the purchase of your new home or investment property. For more information, click the link down below. You can check me out on Instagram, as well as you can check my website out if you're looking to start the process of buying a home and getting approved for your mortgage. See you guys in the next one. Bye.